AMD, the artificial intelligence and personal computer and gaming company, reported quarterly financial results after the stock markets closed on May 6, 2025. The stock price increased by 1% or 2% following the company's earnings results. Of course, I've had AMD ranked as one of the top 9 stocks to buy in 2025. I'm going to update that recommendation in this video and let you know if I still think this stock is one of the best to buy right now in 2025. But before I do that, I'll review the big picture items, the things that investors need to know from the company's latest quarterly earnings release and what it means for investors. I also updated my proprietary discounted cash flow valuation model for AMD stock. I'll share that with you in this video. I'll also share with you the forward price to earnings ratio to get another perspective on valuation. And finally, I'll update the recommendation on AMD stock.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so AMD CEO saying that we delivered an outstanding start to 2025 as year-over-year growth accelerated for the 4th consecutive quarter, driven by strength in our core businesses and expanding data center and AI momentum. So whenever a business talks about accelerating revenue growth, that's really great news. That's talking about the second derivative, which I've talked about over recent years, several years, how important that second derivative is, the rate of increase. For a business like AMD, it's increasing the rate of growth. And that's really good news because that's allowing the company to expand at an increasing rate and catch up to some degree to the success that NVIDIA is having in the artificial intelligence segment. It's also good to see that the company said that they're positioned well for strong growth in 2025. So things are going well, and the management team expects things to continue going well for the rest of 2025. Still, AMD stock price has not performed well in 2025, and in fact in 2024, relatively speaking, it trailed NVIDIA significantly. And one of the bigger things about AMD is that it's not having anywhere near the kind of success in the AI market that NVIDIA is having, and that's been one of the major disappointments from investors who were hoping that the company would have better success in the AI segment. Don't get me wrong, they're doing a solid job. The AI products they've delivered for the data center have been the best product launches in the company's history. It's just that investors have such high expectations for any company that's operating in that data center AI market because that market is growing so quickly that investors are expecting more robust growth from AMD. So for the quarter that just ended, they reported revenue of $7.44 billion, which was up 36% year over year. Operating income jumped by nearly 20 times to $806 million, up from $36 million. But still, the operating margin is just 11%. Compared to, again, it's unfair to continue comparing AMD to NVIDIA, but NVIDIA's operating margins are up above 60%, while AMD is still 11%. To be fair to AMD, they have significant segments that are not growing as quickly, including the gaming segment and the personal computer segment, which are not growth industries, while the majority of NVIDIA's revenue is coming from the data center AI segment, which is growing more quickly. Speaking of AMD segments, you can see here it's a story of two different segments, two different cities. Data center segment revenue in the quarter was $3.7 billion, which was up 57% year over year, driven by its CPU for the data center and the GPU for the data center. So they have two strong products in the category, and it's leading to excellent growth. And now the business is almost 50% coming from the data center, right? Their total revenues were $7.4 billion, and data center revenue was $3.7 billion. So compared to a year ago, you're getting AMD business, AMD stock, with a much larger percentage of revenue coming from the data center segment, which of course is more attractive for investors because that segment is growing more quickly. So as this segment continues growing more quickly and outpacing the other segments, it's becoming a larger part of its business, which is now becoming a more attractive business because this category is growing more quickly and it's a more profitable, more lucrative segment overall. Client and gaming segment revenue were up 28% year over year, but the gaming segment was down 30% year over year, and the embedded segment was down 3% year over year. So they've got two segments that are growing and two segments that are declining, but the embedded segment declined by only 3% year over year. These declines in this segment were much worse over the trailing 12-month period. For the second quarter, AMD expects revenue to be approximately $7.4 billion, which was around the same amount they delivered for the first quarter. And non-GAAP margins, if you exclude the one-time inventory charge of $800 million, would have been 54%, but including that inventory charge, it will be 43%. Remember, this is the export restriction for certain GPUs going to China. AMD reporting an $800 million charge. Remember, NVIDIA reported a $5 billion charge for that export restriction, which will limit their ability to sell these products into their customers in China. All right, so let's look at valuation again. My proprietary discounted cash flow model, which I'm not going to go through all of the steps. If you want more of these videos and step-by-step breakdowns, join my channel as a member, less than $5 a month. It's a great deal. But in this video, let's just focus on the outcome. My intrinsic value per share calculation for AMD has the business valued at $135. Current market price is only $99. So there's at least 35% upside according to my discounted cash flow valuation. Now, when measuring the business on a forward price to earnings, which I like to go to finchat.io, there's a link in the description for a discount to this service. The forward price to earnings is just 21.7, near the lowest it's been going all the way back to January of 2024. So whether I measured this business on a forward PE or whether I measured the business using my proprietary discounted cash flow, it looks undervalued. In fact, it looks significantly undervalued. And so to update my recommendation, do I still think AMD is one of the best 9 stocks to buy right now? The answer is yes. I updated that recommendation on May 7th, letting my viewers and followers know that I still think this is one of the best stocks to buy right now.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.